So do you know some of the risks that people don't talk about money market funds? And I'm one of those people in Kenya who talk about money market funds a lot, and I encourage you to invest in them all the time. One of the simplest investment that you can start with, especially as a beginner. So before you dip your feet into other more complex investments, I always say, hey, can you try money market funds? So a lot of people talk about money market funds. It's an easy investment, it's a valuable investment, it's an accessible investment as well. And I do talk about it a lot. But one thing that we may not talk about as much is the other side of money market funds. Like I always say, every investment has some downsides, has some risks. What are some of the risks in money market fund that maybe we don't focus so much on, or we don't actually discuss? And therefore, sometimes when people are getting into money market funds, they assume that everything is just easy peasy, right? You're thinking that, oh, I'm getting into this investment, everything is going to be easy, I'm going to make my money, all going to be perfect. Of course, we all want that, and it would be nice to have that kind of investment. But the moment you give your money out there, there's always a risk. There's always, those systematic risks, market risks, different types of risks that could come in that could then affect your investment and affect your money. And however much you say the principal amount is safe in money market funds because you're just earning interest and they're just investing in these safe debt securities, there is still an inherent risk with money market funds as well. And it is good to know these things so that you can either decide if you still want to invest in them or you want to avoid investing in money market funds. So this is something not many people talk about, but here at Kensmoneymatters, we're going to talk about it. And just to backtrack a bit, if you don't know about money market funds, please check my channel. I have so many videos. If you want to know the meaning, how to invest in them, which ones are the best ones, which one pays you the best interest rates, which ones are the best managed, I think my channel has like loads of videos on money market funds. So if you want to get basic information and knowledge about money market funds, check those other videos before you look at this one, because I don't want you to get all fearful about money market funds without actually knowing the other basic stuff about money market funds, and also knowing the advantages and the benefits of money market funds. So try and check those videos before you then look at this fund that will then make you fearful somehow. So money market funds, what are some of the risks? Number one is the interest risk. They are supposed to pay you interest. We talk about the interest in money market funds. Like right now, we're talking about 18%. Some of the best money market funds are paying 18%. I think like Etika, Saiton, Gen Africa. I'm not sure the exact amount, but I'll do a follow-up video on the latest ones right now and how much they're paying. I know we are at around 18.7% as we speak on the best money market funds. Now, that's quite a good return if you think about it. It's quite a stable, steady, easy return. And we say your principal amount is safe, right? So there's interest that they pay you, but the risk associated is that this interest can actually go low. And the thing with money market funds that you need to take care of is that these interests are usually not fixed. So it means when the economy changes and the environment changes, and there are some other factors that affect the economy, that factors that affect the interest rates, then this interest is likely to change. So as we speak, we are at 18%. Tomorrow we could be at 15% because there could be inflation. There could be the government trying to control, things like inflation, recession. The government could be coming in to try and control the economy to ensure that things go as expected. So either to control inflation, to control recession, try to bolster the economy, try to slow down the economy. Depending on what the government is trying to achieve, there's always the work of the CBK to try and control the economy and how it's going. So all these factors can end up affecting the interest rates of money market funds because then they follow the economic environment of the time. Now, besides just the economic risk, there's also the risk of things happening in the country. You've seen what's happening in Kenya right now, for example. The political system is just all messed up with lots of issues, with lots of, opposing sides and people fighting and here and there. So it makes a precarious economic environment. And what happens to interest rates? They follow what's happening in the environment. They follow what's happening around it. So with those interest rates, there's that risk that the interest rates could then spiral downwards depending on the bad economic environment. Good thing is if they go up, but sometimes you also don't want them to go too high because that could mean there's something happening in the economy that's not properly controlled. So there is the risk of interest. So despite you getting 18% today, there's no guarantee you're going to get the 18% tomorrow. You might get way, way lower than that. So interest risk is an inherent risk that you must understand as an investor with money market funds. Then the second risk is the credit risk. Of course, money market funds are invested in debt securities. Now, if they're invested in debt securities, they are given out as loans. Now, if you give out a loan to someone who is not in a position to pay, what happens? They default and they're not able to get back your money. So that also lies with money market funds. They could have invested money in places that they're not able to recoup their money when they want it, or the people they've given the money to cannot pay. So let's say, for example, they invested in treasury bonds, for example, or treasury bills, and the government is not in a position to pay them, and they invested billions and billions of money. What happens? You end up losing money. You end up, being in a really difficult situation, because then you can't really get the money out of the money market fund because they won't have that liquidity anyways. So that's a risk that is inherent as well. They are investing in debt securities. Debt securities, from the name, debt, means that the person that you issued the debt to might fail to pay. If they fail to pay, that directly impacts your ability to get your money from the money market fund. And so in most cases, you could find that the issuers are not even in a position to pay back the principal amount. So you could say, oh, something is happening in the economy, and therefore the person you gave the loan to cannot pay even what you gave them initially. It gets to you. It gets to you as the client, it gets to you as the customer, because you're the one investing your money in there. The third risk that I do talk about in different investments is fees. Fees is a big one. If you are paying fees in your money market fund, which you do because everyone pays fees, you know how much they can accumulate over time to be a lot of money. So depending on how much you pay is shaving off whatever it is you're getting as interest. So if you're paying fee on your money market fund and it's too high, and that's why I always say you have to check how much you're paying in fee, then you could be interfering with the interest amount you're getting. So make sure that the fees, which is most of the time is this management, administration, whatever fees that you're being charged by your money market fund, whatever name they give it, make sure that is something that is within the ranges that you are comfortable with. So don't end up taking something that is too high in fees, even if it's giving you very high interest, because at the end of the day, they still end up taking back that money. So look at the fees you're paying in terms of management, any other fees that they could come up with, joining fees. Some of them have joining fees. So make sure you know how much that you pay. Even when you do things like transfers, for example, you could be transferring money from a money market fund directly to a different account, a bank account, an M-Pesa account, whatever it is that they give you as an option to transfer money to. But you want to make sure that the fee you're paying is reasonable fees. So be aware, how much are you paying in your fees before you start investing in that money market fund? And then the other one is regulation. So some of these money market funds might not be properly regulated. I know most of you have seen something about Cyton recently, and it wasn't a money market fund product actually. It has different products in Cyton. It's been one of the most dramatic, issues within Cyton, and everyone is, fearful of Cyton. If you check the papers lately, you've seen Cyton, in court about a particular product that had issues, which I've done a video about. Now, it's not the money market fund, but that particular product was not regulated. Now, the risk you always take as an investor with money market fund is if you do not check that the firm you're dealing with is properly regulated, you might end up in the same situation as the investors with that particular product in Cyton. So you want to check that the product you are investing, the money market fund specifically in this case, is regulated. Sometimes people assume that because the firm or the company is regulated by the CMA, that the products in there are also regulated. So you have to make sure that the particular money market fund you're investing in is regulated by the Capital Markets Authority in Kenya, because there are certain standards that they must meet, there are certain auditing that must be done, there are certain things that they must do for them to operate, and that keeps them in check. So make sure that your money market fund, because now we have like so many that are just springing up every single day. So try to ensure that all of them are properly regulated before you go in and put in your money. Because then if you put in your money and you try to get out, it becomes a long story because there's no proper laws and regulations that will be protecting you as an investor. Then the other risk with money market funds is that they're not insured. Now, in the West, when you invest in most of these, I would say, investment companies or brokers, we are insured up to a certain level. So there's an amount of money that you will be given by the regulator in that country. So we are insured as investors. Money market funds, yes, they could be regulated, but you're not insured. So if the company genuinely has gone down or underwater, you're likely not to get back your money. So in that sense, you want to understand that anything could happen and they're not insured, your money is not insured. If there's something happens that it genuinely actually cannot pay you your money, then you're just going to lose all the principal that you have paid if they're not in a position to give you even the principal back. So these are risks as well that you want to be aware of, that the money is not insured in any way. Then that also then ties into the next risk, which is the company collapse. Now, remember, these are just companies. People just come up and they form companies, they manage this money, they are money managers, they are professional money managers. So in that sense, they can make decisions that are not good for the company. They can make decisions that lead to collapse of the company, or the management of the company could just not be in a position to manage the company properly. What happens? It collapses. Now, if a firm collapses, if a company that you have invested in collapses, then of course you know what comes with that. There are so many risks that come with the company collapsing, including you losing your money forever and not ever getting it. So these are some of the things you want to understand before you get into a money market fund. What is the history? How stable have they been? How is the management? Who is managing it? What's the history of the main management? You know, the people behind the management. You want to understand whether they have other products that make them stable, that they make money from, such that if there were risks in the economic environment, they could still stand it and still come up on top. Then we have liquidity risk. Now remember, each time you go and withdraw your money from the money market fund, it's just like withdrawing your money from a bank. What happens? They need to give you that money. And that means they must have that liquidity. They must be liquid enough for them to give you that money. Now, that is something you want to always remember. There's a risk that they might not be able to have that liquidity at the time you need it. So let's say there's something happening in the environment and everyone tries to withdraw money at the same time. They might not have the liquidity to give that money. So there's the risk that they might not have enough money to give all their investors. So let's say everyone invested $1 million and you all go one day, you wanna withdraw 1 million. They won't have it because that's money. The money you see in your account is not hard cash kept in there. The money is invested somewhere else. So if everyone comes asking for that money, or too many people come asking for their money, what happens? They fail to give you that money because they do not have liquidity. But of course, with the regulation I was talking about, there's an amount of liquidity that every money market fund must sustain as a reserve to ensure that most of their clients are happy. Now, these risks are not like very common risks, but they're just risks that you must be aware of. The final one, which nobody talks about, but it's very important, is taxes. And this is something that all of us pay. We all pay taxes. So with money market funds, you are liable for a 15% withholding tax. Now, that 15% withholding tax should be calculated when you're calculating your returns, so that you don't just say you're getting 18%, you're getting 17%, 16%. What actually goes into your pocket is less 15%. So you always have to remember that. This is just standard across the board in Kenya. I don't know about other countries as well, but I'm sure there will be like withholding tax depending on which country and how much they're taxing you. Just make sure you know your taxes, you know how much you're actually getting in return from a money market fund, so that in case there's another opportunity that could give you better returns, you are better informed and you know that you're going to put money where you're getting this kind of return, which is the exact return. Now, taxes do tie in with fees as well. So you want to look at your taxes, you want to look at your fees that you're paying them, you want to look at everything like transfers and stuff like that to make sure you know exactly what is your return on your investment. Because some of them will come to you telling you they give you very high returns, but when you look at what you're getting into your pocket, it's not actually as much. So make sure you know all these risks. Like I said, this is not like big thing that happens most of the time, but it's good to be aware as an investor that this is not just a perfect investment whereby you will never, ever, ever, ever lose any money and you don't have to worry about anything. There are things you must look out for. So some of them you can't actually prevent, you can't even foretell, but you're aware of them. But some of them you can foretell. You can look at how it is performing, the history, the management. You can look at liquidity levels, for example, their investments. You can look at all these things and get some kind of view and some kind of focus about that particular money market fund. So let me know what you think about money market funds. If this is helpful, share, subscribe, and see you next time.